Hello, my name is Julien Neyon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. Last week, we have been working on the company Biosynex, and today I'm going to present our first analysis of this stock. Before I begin, I would like to remind you this video is not an investment advice, but only an opinion. We do not do any business with Biosynex and do not hold any long or short position in its shares. Having said that, let's get started. Biosynex is a small company specializing in rapid diagnostic tests that has become the French #1 and one of the European leaders in antigen tests during the COVID crisis. The company, which generates almost 90% of its revenue from COVID products, had sales of over 380 million euros last year. More specifically, Biosynex, which develops, manufactures and markets its rapid diagnostic test, generates 3/4 of its sales from doctors, laboratories and hospitals. 1/4 of its sales are made to pharmacy and mass retailers. In pharmacy, the company claims a 50% market share in France. Finally, also France is the company's main market, Biosynex achieved more than half of its sales through exports, Germany being the company's main export country. Founded in 2005, Biosynex went public in 2011, with revenue of barely 1 million euros at the time of the IPO. In 2012, thanks to its fundraising, the company made its first major acquisition in Germany in the field of rapid diagnostic tests. Then, in 2015, it merged with Prodiag, a French company specializing in the distribution of diagnostic products to pharmacies. Between 2016 and 2019, Biosynex continued its growth strategy through acquisition and increased its turnover to 35 million euros. As Biosynex burned cash, this development was mainly financed by capital increase, and those capital increases were unfortunately very dilutive. Now, taking into account the Prodiag merger, Biosynex raised almost 38 million euros over the period. In 2020, with the COVID crisis, the company changed dimension. Biosynex very quickly positioned itself on the serological test market, then PCR, and finally antigen test. Taking advantage of its market position in pharmacy, its sales soared. The COVID testing market emerged with the virus in 2020 and has since followed the various wave of resurgence linked to variants. However, it has also undergone important changes linked to the development of new technologies, competition, and public health regulation. In France, for instance, the COVID test initially focuses on PCR tests in which Biosynex didn't have a very strong position. However, in 2021 was the year of rapid antigen tests and Biosynex sales boomed. The market reached a new peak at the beginning of this year, but is now experiencing a strong decline. First of all, the decline of the Omicron variant is underway and should accelerate in the coming months. Above all, under the effect of competition, notably from China, prices have fallen sharply, particularly for antigen tests. The contraction of the COVID test market due to the sharp drop in prices can be seen in the company figures. In France, the number of COVID tests performed in the second half of 2021 compared to the first half increased by almost 75%. Over the same period, Biosynex recorded a 32% decrease in COVID sales. Despite a record start of the year, the sharp decline in sales is expected to continue. Over 2022, we anticipate a decline of more than 50% in sales. Biosynex results should also be down sharply, from more than 100 million euro estimated for last year to only 38 million euro in 2022. Beyond that, it is difficult to be certain, but it is likely that the COVID revenue and earnings will continue to decline sharply. However, we do not believe that they will disappear completely. Firstly, as we have seen, the virus keep re-emerging as it mutates. Second, vaccines, while they protect against severe forms, do not prevent contamination. Finally, the world population is far from being fully vaccinated and probably never will be. As we have seen, we expect Biosynex revenue and profit to fall sharply. However, even if the COVID virus were to disappear completely, Biosynex should quickly start to grow again. The company has a means to change dimension once again. Indeed, Biosynex, which according to our estimate has generated nearly 140 million of free cash flow since the start of the pandemic, now has 115 million in net cash. This war chest should continue to grow and could reach nearly 150 million euro by the end of the year. It is more than the expected turnover of this year. To this should be added a syndicate loan of 109 million euro recently signed. Biosynex is counting on this cash to continue to invest, but above all to make new acquisition. Historically, the company has already grown through acquisition. During the pandemic, the company continues this strategy by making new acquisition and to complete its product range. In particular, the group recently acquired a 19% stake in the listed company Seradiag for almost 5 million euros. But with an acquisition capacity of over 250 million euros, Biosynex can go much further. Given the uncertainties surrounding COVID, the company declining result, it may seem difficult at first to value Biosynex. In reality, it is not as complicated as that. Indeed, as we have seen, the company will have almost 150 million euros in net cash at the end of this year. This fixed amount represents more than 3/4 of its current market capitalization. In other words, the cash should represent at the end of the year a value of almost 14 euros per share, when the stock is today at around 18 euros. Clearly, Biosynex appears undervalued even if the company will suffer specifically from the decline of antigen tests. On 2023 estimates, Biosynex is valued at barely 0.2 times its revenues and 1.1 times its EBITDA. Its French competitors, Eurobio, is trading 1 time its sales and 3.8 times its EBITDA. Its UK competitors, Novasit, is at 3 times its sales and 10 times EBITDA. This undervaluation also appears in DCF. On the basis of a WACC of 11%, a perpetual growth of 2%, or an exit EV on EBITDA of 6, Biosynex comes out to a value of 28 euros per share. Now, beyond the valuation of the current asset, it's also important to bear in mind that the future valuation of Biosynex will largely depend on its next major acquisition. Indeed, our valuation of the company at 28 euro corresponds to a capitalization of 310 million euro, including 160 million euro of assets and 150 million euro of net cash. This cash could be worth much more if invested in a strategically interesting company acquired at a low price. At the contrary, a large overpriced and poorly managed acquisition could destroy value. Nevertheless, it's more likely that Biosynex will succeed in its next big acquisition than the other way around. The company has been built on M&A, and the acquisition made by management have so far proven to be successful. That's it for today. I hope you have enjoyed this video, and if you would like to know more about our opinion, you can contact us and order our first analysis pack. That includes our presentation, our forecast and valuation model, our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at www.lperesearch.com. Thank you very much and see you soon!